Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Happy to be on again, Jim.
Trade wars, are they still messing up what we're seeing in the markets and influencing things perhaps we never thought they would?
Absolutely. There's no question. That's the, sorry to use the pun, that's the bull in the china shop here. But it's really interesting, the turns that we're taking now. The trade war isn't just a trade war anymore in terms of trade. We're now hostage taking. We're grabbing Chinese citizens in Canada. We're grabbing Canadian citizens in China. And the President of the United States saying is, no problem. If I get what I want, we'll take care of that. It's clearly hostage taking, which is a very striking development. Now, is it all the art of the deal, and will this all work out well? I hope so, for the economy, for all the people who would suffer if it didn't. But it's pretty alarming. There are egos on both sides, and I think it could be a dangerous mistake to assume that just because both sides want to see a positive solution come from this, that's what we'll get. I just hope so.
Do you expect there will be some rapid progress? Because after the G20 meeting, the president sounded pretty optimistic that good things would happen, and then they imposed a 90-day deadline. Why would you impose a deadline if you're negotiating in good faith?
Well, it was a 90-day ceasefire, so you could look at it. You had to put some time on it. If it's a permanent ceasefire, then that's the end. Nobody needs to do anything. So I don't have a problem with that. A politician sounding optimistic, don't they all? That doesn't particularly impress me. What did come up on my radar, and I think the markets reacted to, was when the Chinese said, oh, well, we will reduce the tariffs back down again on U.S. cars. That was something Trump had signaled, and the fact that they also made the same noise, I think, that made a difference, and it was interesting to see the market respond to that. So for commodities investors in general, metals investors particular, I think this whole thing in some ways is overblown. Like, the impact of a trade war comes from higher costs passed on to consumers, which eventually dents their purchasing power. It's a drain on the economy. But these things take years to percolate through economies, and the markets are reacting instantaneously to damage that's only beginning to happen now. So it could very easily all go away very quickly. I would say that what we're seeing now is a coiled spring building under commodities and metals in particular. So if we do get a deal, fantastic. I think that releases the spring. I think we see a terrific rebound in commodities and metals in particular, which would be great for us. But I just don't want to bet on that. I don't want to tell everybody, hey, it's going to be happy days again when this happens, because it's quite possible that it goes the other direction, or that this thing drags on without resolution for years, to the disadvantage of Chinese and Canadian travelers.
Well, the American tariffs on Canadian steel and aluminum remain, and we had GM say just a few months ago that those tariffs were making the cost of building cars in America terrifically expensive, and then they announced that 5 plants in Canada and the U.S. would be shutting down. So yeah, these tariffs didn't help them.
No, but GM was in trouble already, or facing serious cost issues anyway. And not to be a union basher here, but when you have people in the first world trying to protect very high wages for something that can be done equally well for low wages elsewhere, or for no wages by robots, you end up in a situation where wages are held higher than the market really justifies. And at some point, that's untenable. So I salute General Motors actually for making the move. In the future, people aren't really going to make cars. They're going to maintain the robots at best. If the robots aren't maintaining the robots, I think I understand people trying to defend their livelihood. I get that. But you can't stop the future from coming.
When you speak of robots in the future, Elon Musk saying he might buy those plants to build his very popular Tesla vehicles. Is that a good plan on him? Because it seems to me he didn't know much about automaking, and that was his holdback. If you take over an existing plant, you just have to retool it. The trained people are already on site. Yeah,
that makes sense. And whereas it would be difficult for General Motors to just fire 90% of the workforce, if the plants are shut down and everybody's gone, it's easy for a new person to come in and only hire back to 10% of the very best and most productive and capable of working with the new technologies. Does he need all 5? That's pretty bold and ambitious. But if I had an auto manufacturing business in the People's Republic of California, I'd sure be happy to look at a state-of-the-art idle plant somewhere else in a lower tax jurisdiction.
We'll have more with Lobo Tiggre right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, uranium, is that a shining metal that doesn't, or that's doing better than just glowing in the dark?
Yeah, well, thanks for bringing that up. I want to say that I was not very early in this trend, but I did call higher uranium this year. And why wasn't I early? Because we'd seen false starts before. I completely understand the people who were skeptical of uranium rebounding. It had done so a couple times before, and then the rallies fizzled. But those fizzled rallies result in a series of higher lows, which my technical friends say is very important in terms of carving out a bottom and heading north. And those have not only held the recent fluctuations that we've seen in uranium prices, the corrections, if you even want to call them that, are, nickels and dimes, and then it goes on to newer highs. So the pattern is very strong, and it's not just the technical pattern, the narrative, if you will. The fundamental story here is very strong. The Chinese are building plants. The Japanese are no longer, going anti-nuclear. They have restarted, almost 10 plants. They're supposed to be restarting up to 30 plants. And there have been major production cuts, and the stuff cannot be mined even at current prices. So I'm extremely bullish on uranium. I'm happy to say that I'm in the black on my investments. People are welcome to sign up at independentspeculator.com to see where I'm putting my money. But the story is very, very strong. I would say, I'm excited about a number of different commodities and opportunities, but uranium right now offers the best mix of risk-reward ratio, if you will. It's a very, very solid trend. The fundamentals are very strong, and the technicals are very strong. And the stocks are still relatively cheap, and they offer enormous potential gains with, I think, a lot less risk than if you're going to bet on, say, vanadium, which ran up 500%, based on, a change in China, and now it's corrected. That change has been done. It's in the past, and we're starting to see vanadium come off. So I think there's other exciting, flavors of the day, and I think I see them as much higher risk. Uranium is not a flavor of the day. It's a fundamental story.
Vanadium, what is it? What's it used for? And why are you interested in it?
Well, there's two answers to that, Jim. I am actually longer term a vanadium bull because vanadium is uniquely well suited for these very large industrial or even city scale batteries, the vanadium flow batteries. So as we move deeper into the new energy paradigm, one of the big troubles with the so-called renewables, including solar and wind, is that the sun doesn't shine at night, the wind doesn't blow all the time. So in order for these energy sources to really compete, even though their costs are coming down, that's not enough. You need storage. You need the batteries that go with that, industrial scale, big batteries, and their costs to come down. So that's happening too. We have a confluence of trends here that's very bullish longer term. And as I say, vanadium has a unique role to play in that. So longer term, I'm very bullish. But in the immediate term, there was a change in regulations in China that required a higher vanadium component in rebar. And that's currently the main use of vanadium is its strengthener in steel alloys. So that caused a bit of a vertical jump in vanadium prices. That regulation was implemented in November. And so, like I say, that's behind us now. I think the market got a little overexcited. A 30% increase in vanadium doesn't justify a 500% increase in vanadium prices, if you ask me. But speculation is like that. These things run. And so I do think vanadium settles at a higher price than before the recent spike. But I see near-term downside risk before that happens. So long-term bull, short-term bear on vanadium.
Was the reason for that buildings were collapsing because they had weak rebar? I'm not going to go there, Jim. I don't want to say that because I'm not expert enough to say. I can also say, though, that they build things in an awful hurry in China, and it's impressive on the one hand, where something that would take years to even begin to break ground because of all the permitting and everything in the U.S. or Canada. They just do it there. They just build it. They build skyscrapers in a year. It's amazing to see. But you have to worry about some of those corners they cut. I can't say that it's all the rebar or how big a factor that is in the other factors there. But clearly the regulators there saw a reason to increase the required strength of the rebar they're using. We'll have more with Lobo Tiggre right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, do you see crude coming back anytime soon?
It could and it could not. I know that's a wishy-washy answer, but the thing about crude or the oil space right now is that a lot of the drivers are sort of political decisions. If OPEC says, "Oh, we're going to cut production," that's not a structural supply issue. That's just simply turning a few valves that could be turned the other way again. I'm oversimplifying. But I think you get my point. If Russia goes along, great. Maybe it sticks for a while. If Russia decides they need the cash, maybe they don't. And that sort of upsets the card for OPEC. I mean, it's really interesting that OPEC just lost a member. Okay, maybe it's a minor member. They weren't one of the major producers, certainly not Saudi Arabia, which is leading the charge. But I think it's quite telling. I mean, that's the first time. And so to begin to see OPEC coming apart under stress here, I actually see that as a very bearish signal. If OPEC disintegrates further, nobody's going to stick to those voluntary cuts. And meanwhile, the prices are high enough to incent the shale producers of the U.S. to keep going gangbusters. So, yeah, if it's a big if the cuts hold, I could see oil heading higher. But I see no way anybody can guarantee that they're going to hold. And even if they do, it's possible production from elsewhere could swamp them.
gold, is it going to perk up? I mean, it's had such a long, I would say, smooth ride at a low place. Is it going to pick up?
Smooth ride. A lot of our listeners may not agree with that. It's interesting, though, that
it may not have been a ride through I was going to say it may not have been a ride through a neighborhood you want to be in, but I'm just saying that if you look at a chart, it wasn't that bumpy.
Yeah, well, yeah, and I think that's actually worth stopping and focusing on because, when gold corrected, people saying, "Oh, watch out below, it's going to below 1,000." There's no, I remember, Harry Dent calling for $700 gold. That never happened, and we haven't revisited the 2015 lows. It's range bound. That's not necessarily a bad thing. Actually, if you're a miner, for gold to be this stable, I mean, who thinks of gold as being stable? We can now have 3-year charts of costs and prices that actually allow for unusually stable modeling. Like your three-year trailing price is neither ridiculously higher than it should be or ridiculously lower than it could be. Your conservative 3-year trailing price is now close to spot. So what does that mean? What it means is it's pretty easy to see who can make money and who doesn't. And who's got margin that can withstand lower prices and who doesn't. It's very easy to sort the wheat from the chaff for people looking to, for gold bugs out there looking to buy. I think this year's tax loss season should bring us some excellent opportunities. There are going to be companies that make money and could make money at lower prices. And there's a very good chance they'll go on sale during the weeks ahead, even starting now. It's kind of a quiet December this year. So I think we may see an early tax loss selling season. And I've no doubt that gold will continue to recover. I think eventually it breaks out of the range. Maybe next year, maybe not. Doesn't matter. The money makers make money anyway, or even the development projects that work at current or lower gold prices, they go forward anyway. So absolutely, I would not hesitate to buy great companies on sale this month during tax loss season.
Currencies. Has Brexit brought new light on the British pound? Because it seems every day there's some new political development on Brexit, and that really affects the British currency, doesn't it?
It does, Jim, but I'm not a currency trader, so I'm just going to defer that one and not try to BS your audience.
Okay, so currencies and the price of gold, what's the connection there?
Well, there I can say something more meaningful. Despite the fact that we have seen again in October and again in November, we've seen fear come back in and push gold prices. Despite that, the dollar is still very firmly in the driver's seat. The strongest variable for years now, and very strong this year, has been the price of the dollar. So if Brexit or other troubles in Europe, the French now, they're going to have a budget issue now that they've promised to raise wages and so on. And look at Italy. There's lots of potential trouble in Europe, despite the European Central Bank saying, okay, we're all done with our quantitative easing. Who knows what's going to happen in Europe? And that could boost the dollar, or appear to boost the dollar anyway, compared to the euro. And that could be hard knocks for gold. Until gold decouples from the dollar, which it does do under times of systemic stress. But until then, you have to be wary of the dollar. And, the bad news out of Europe, oddly enough, it could be great if you're in Europe and you're buying gold in euros. But if you're looking at the international spot price quoted in dollars, that's a headwind.
Lobo, thank you so much for speaking with us.
Comment like I see it. I know our gold bug friends out there wanted me to say more rosy things, but I'm not here to be a cheerleader. I'm here to give you, the best thoughts I can. So there you go.
And you look horrible in those short skirts anyway.
Thanks, Jim. Happy holidays, everybody. And feel free to stop by for more at independentspeculator.com. There's a free digest there that covers the kind of topics Jim and I have been discussing.
My guest has been Lobo Tiggre from independentspeculator.com. He was speaking to us from Puerto Rico. If you have any questions for Lobo or any of our other guests, you can send them to info@howestreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.